Mike Tedeschi, Wealth Management Advisor with Perspective Wealth Planning. In this week's market breakdown video, we're going to take a look at the four major U.S. indexes. We'll take a look at some commodities as well as the U.S. dollar, and as always, we'll jump into some breadth readings. So let's jump right into it here. First and foremost, we have the S&P 500 up. We held that important 3,200 support zone, have rallied straight up, and now we're at that 3,400 to 3,420 resistance zone. Recording this Thursday before the market opens. It looks like we're going to open right at that zone. So any more follow through to the upside would be a nice breakout above this key resistance point here that has been in play over the last month or so, and that would kind of target a move back up towards those all-time highs. We take a look at the Nasdaq. Same setup, same comments apply. We're basically right there at that potential breakout zone at 11,600 or so. We're going to open maybe 30 points underneath of that here this morning. So has the potential to have that kind of break. And then if we did, we would be looking again for that all-time high. Failure here, of course, would target the bottom of that range once again. We take a look at the Dow right there at about that 28,500 level. We're looking for a break above that, target back towards that 29,000 area. And I wanted to take a little bit more time here to talk about the Russell. The Russell finally put in a higher high than a few months ago. This week on the 6th. It was actually able to poke up over that 1600 level. Right now it looks like we're going to open about 1630, which would put us up right about here into that resistance zone. So that is actually would be a series of higher highs that we've put in here from June, August, and now here in October. And we have a series of higher lows that were put in there as well. So it kind of looks like that upward channel. Really any more push to the upside would break above that, and then we would be targeting the highs of the year back in February around that 17,000 level. So really strong action there out of the Russell, and you can see we did break below that 1450 zone and then immediately kind of rocket shipped higher. So volatility has always been higher in the mid and small caps. We certainly have seen that here in this chart, but for the first time in a while we actually put in a new high, and that is not like the rest of the indexes. The rest of the indexes are still way below where they were a month or two ago. It's not way below, but below where they were a month or two ago. The S&P 500 is still down about 4%, and the Russell subsequently is continuing to push up. So that is a good sign there for the bulls, seeing that kind of healthy rotation. That's kind of what we talked about, what we really wanted to see. When we talk about rotation here, let's talk about breadth real quick. This is also what we really wanted to see from the bulls' perspective. When we talked about the Nasdaq McClellan Summation Index last week, we talked about that 300 zone kind of being that support from the middle of last year, and we really wanted to see it turn back higher, or else we kind of really opened the possibility for a much deeper kind of sell-off. And what we saw was that nice hold there at that minus 300 and continuing to push higher. So if breadth continues to head back to the upside, we'll be back above that zero zone here in the next session or two, which would be a very good sign for the markets moving forward. Jump in, take a look now at the emerging markets. We back this chart up and take a look at it on a monthly basis. We are back into that major resistance zone. We've talked about this area a lot, and we're right back up in it. So this kind of looks like that potential flag kind of set up here right underneath that resistance zone. So we're going to continue to watch closely to see what happens on the emerging markets. We don't have a breakout at this point in time, but more follow through here to the upside and really a move above that 1140 zone would be very bullish, and it's really not that far away. So the potential for that to happen here in the near future is certainly in play. The dollar, we've talked a lot about that. I want to jump in and take a look at the dollar here right now. We had that nice rounded kind of bottom, break back above that 93, 94 zone right here, and we pushed up. And where did we fail? We failed right at that resistance point that was put in from the low back in March and subsequently turned back down. And now if we look at what the dollar is doing, it is basing here over the last week or so right on that 93.70 zone. A move below it would look for kind of that continued washout of the U.S. dollar that has been in play here over the last couple of months. If it were to hold this, you would expect to move back up, and then, of course, that key zone would be the high from a couple of weeks ago in terms of what the dollar is going to do next. In the short term, we have a series of higher highs and a series of higher lows, so we kind of entered a channel here moving to the upside, but of course, when you look at the bigger picture, we're still clearly in a downtrend on the midterm side here. So what happens right in this zone is important, and it's going to be important what happens in the commodity space. I want to take a look in at oil. Oil is still trading below that 41.50 zone. All right, it had not made that major breakdown. It actually put in, when we look at it here, a little bit of a higher low. So slightly higher low has been put in here, and we have lower highs, but we really have this wedge that is building. A move back up over 41.50 would be really good. A move underneath that 36, and of course we've talked about where that target would be down at the 28. I think a lot of that's going to have to do, of course, with the strength of the U.S. dollar and economic numbers as they continue to come out, see if demand is still high for energy. Next, let's jump in and let's take a look at gold. Gold held really where it needed to on this pullback. All right, we had a couple of days where we really saw some strong selling, but it just fell right back into this zone. And when we really look at what's going on here in gold, we still have this kind of in play from that big zone lower, and that is still bullish. So we are really kind of watching to see if we can get that close up above that 1925 zone. If we did, that would kind of target that 2000 area again. And right now we're just kind of skirting right around that 1900 psychological level. Not really making a ton of appreciation, just kind of trading sideways. So we're going to continue to monitor this space, but really after that huge push up earlier this year, we've kind of just had a nice orderly kind of consolidation pattern that's taking place, and so we'll need to continue to pay attention to see where that next movement is going to be, either to the up or the down. Last but not least, in the commodity space, what I want to take a look at actually is copper. We keep talking about that $3 level being important. When I back this chart up and look at it in on a weekly basis, you can see this is really that major important zone that has gone back over the last few years. And here we are continuing to fight right in that zone. We did sell off sharply. We put in a higher low in on the weekly time frame, have hold this zone, and now we're pushing back up over that $3 level. I think what continues to happen in copper really does give you a view of the economic strength globally. So we're going to continue to pay attention to that. Over $3 is a good sign. Underneath $3, that's where we have the potential to kind of see that continued weakness take place. So we'll watch this area real closely. As you guys can tell from what we've talked about throughout this video, right, we're at a key zone in a lot of different things. We're not really looking at major, like, new all-time high breakouts on the indexes, right? We're looking for a move back towards those all-time highs. We're not talking about major breakdowns either. The market is kind of trapped in this zone, and I think that's going to continue really until or through the U.S. election. I think once the election is out of the way, we know the direction that the country is going to take over the next 4 years, and whether or not the election is going to be contested or not really is going to have a big impact. And I don't think we're going to really get a massive move one direction or the other until all of that is sorted out. I think we're going to continue to have kind of that choppy up and down zone based off of news headlines, etc. So what we want to pay attention to right here are those major levels. If we do get a break to new all-time highs or a break below 3,200 before that time frame, those would be actionable levels to take. But I think personally that we're probably going to end up being trapped in between those two zones until we get some ultimate clarity of the direction of the country. We're going to continue to analyze, continue to watch, continue to pay attention to everything, and keep you apprised of that. As always, if you guys want to reach out and give me a call or shoot me an email, I'd love to talk about the markets with you guys. Please reach me at mtedeschi@perspectivewealthplanning.com, or you can give me a call at 814-580-9881. I hope you guys have yourselves a fantastic week, and I'll see you guys next week. Take care.